Now it's time to bring you the part 2 of the interview segment as South African retailer Shoprite International Limited has announced a potential divestment from its Nigerian operation, that is its retail market in Nigeria. After over 15 years of establishment, well, it has already concluded plans. Now, this follows report of increased competition and government policies such as border closures and local production of consumables. It has now revealed that the arrangements on the complete disposal of its Nigerian subsidiary, Retail Supermarkets Nigeria Limited, is being completed as we speak right now. After due consideration by the board of the group in April 2020, the intention to dispose of a majority stake in its Nigerian operations was approved. Following this move, the management of Shoprite Holdings received interest from potential buyers, and after key talks with buyers, it is at the approval stage in terms of sale of its Nigeria supermarket operations. Now, the retail giant has also concluded plans to finally leave by the end of this year. What does this mean for Nigeria's economy, and how does this project the country's brand in the face of foreign investors? To give more answers to this and much more, I have joining me via Skype the Director General of the Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. Good to have you on the show this afternoon, Dr. Muda Yusuf.
Thank you very much. Good afternoon to you.
Now, in our last conversation, talking about this divestment plan, does this come to you as a surprise? I remember our last conversation was just looking at Nigeria's trade policy, and this isn't the first time Shoprite is leaving anywhere. In 2014, Shoprite left Tanzania. In April 2020, it also left Kenya. So this is no news per se, but why is this worrying for you as a player within the industry that has an interface with so many business entities, big and small?
Yeah, well, the exit of any investor from any economy is generally not good news. So we are not happy that we are losing investors for whatever reason. If anything, all we should be doing, both as a people and as a government, is to encourage more investors to come in and to also encourage the existing investors to remain. Because an exit of an investor has a negative signaling effect. It has a perception problem that it creates for a country, which is not a good thing. As we speak, we have 300 Nigerian suppliers that supply Shoprite. But the good thing is that it's not as if we are going to experience a total shutdown of Shoprite. What is happening is a change of ownership. And because of the track record of Shoprite, they will not be short of people who will buy, who will take over the franchise of Shoprite. So Shoprite as an investment will still remain. The ownership will change. And hopefully, because it still is a franchise, the standard will still be retained. But having said that, the decision of any business to leave a particular geographical area is a purely business decision. Shoprite is an international company. It has close to 3,000 stores across Africa. It is present in 14 African countries. So it's in a position to compare, do a comparative analysis of its returns on investment and assess its business model as to where it should prioritize in terms of investment, as to the outlets that it should close. So I think an assessment of this comparative analysis in terms of returns on investment is what may have informed this decision. Of course, the Nigerian environment has its challenges, but if you have an investor that has other options, being an international investor, then you could have this kind of situation. So it's a question of examining the returns here in Nigeria. Of course, there are challenges, we all know, but let me say that apart from Shoprite, there are a number of South African companies that are here that are not even contemplating anything near an exit. An example is MTN. In spite of the challenges that MTN has experienced, MTN had never contemplated leaving the country. Why? Because they are making a lot of money here. The returns on investment, the kind of money they are making here, they can't even compare it to what they are making in South Africa. So it depends on the sector in which you operate. We have Stanbic IBTC, it's a South African company, they are doing very well, they are still here. You have MultiChoice. MultiChoice is almost like a monopoly. They are doing very well here. So that is not to say that there are issues affecting foreign investors or investments. But whatever affects them also affects the domestic investors. So these factors may have been responsible for the effect on the returns on investment and the ultimate decision to decide to exit the Nigerian economy or the Nigerian market. As we go ahead, I can highlight some of the challenges that foreign investors are facing, and similar challenges are being faced by the domestic investors.
Well, now,
for some, they can stand it. For some, they may not be able to stand it.
Let's now talk about those challenges you just made mention of. For example, it cites increased competition and certain stifling government policies. What do you think exactly they're trying to paint here in terms of the condition of work, in terms of what they have on ground right now, and why it's not necessarily the most profitable for them? Because we have to paint this picture clearly. If we're thinking of having a stronger investment drive in Nigeria, we have to earn more foreign investment in country. We have to have more establishment in country if we really want to get to where Nigeria ought to be.
Yeah, first let me talk about the environment of competition. Shoprite is operating in the retail segment of the economy. The retail segment of the Nigerian economy is a very, very competitive space. First, we have a very vibrant informal sector in the Nigerian economy. Over 80% of them are operating in the retail sector. Even though they are informal, even though they are small, there are many, and they also pose serious competition to even these big retail supermarket or retail stores. So the size of the informal sector and the fact that they are very active in the retail sector is one. Secondly, we are seeing a rapid growth in e-commerce, online transactions and all of that. A lot of transactions are taking place now online. That is another major issue which I believe the sector is facing in terms of competition. And of course, we are also seeing a lot of smaller, mid-sized supermarket stores, springing up around major neighborhoods, around Lagos and all the major cities. So the competitiveness is becoming more intense. The competition is becoming more intense in the retail sector space. And on top of that, we had some business environment issues affecting those in the sector. The first is the trade policy environment. You have a whole lot of lists on the import prohibition list. We have a lot of products that are charged very high tariffs. And many of these products are products that are being sold in these supermarkets. We have quite a number of products that are on the Forex exclusion list. Because these businesses are operating in the formal sector, they want to do things, and rightly so, through the formal channels. So the kind of compliance that exists at that formal channel doesn't exist with the small businesses, doesn't exist with the informal sector players, and yet they are in the same market. So these policies around trade restriction, around the foreign exchange exclusion, then around the foreign exchange policy generally, is a major problem for many investors, particularly foreign investors. First, there is the exchange rate depreciation issue. If a company was making maybe 300 million naira maybe 2-3 years ago, and is making even 400 million naira now, the value of what it made 3 years ago is probably even higher than what it makes with the 400 million. Because for a foreign investor, they will compute their earnings in dollars. So by the time you take account the exchange rate, their performance at the international level by their owners in South Africa will seem to be dwindling. So what has happened to the currency must have affected this assessment of their performance. So the foreign exchange policy is a major issue. The capacity to even source the foreign exchange. Because if you go to some of these stores, more than half or even 60 or 70% of what are traded are imported. And you cannot easily get foreign exchange for those things. So that could be another major source of frustration. And even as a foreign investor, when you make your money, you also have a responsibility to remit to your parent company, to your shareholders abroad. To remit funds in this economy now is also a very challenging thing. So there are a whole lot of issues around trade policy, which has to do with importation, restriction, import tariffs. There are a whole lot of issues around the foreign exchange policy, which has to do with the currency depreciation, which has to do with the liquidity in the foreign exchange market, which has to do with the ability to remit funds or dividends abroad. So that is one major issue that these investors are facing. Then there are also regulatory issues. There are too many regulatory bottlenecks in the Nigerian economy. We have had an encounter with some of the players in this supermarket stores, and they have complained about how they are inundated with too many regulators, visiting them on a daily basis, coming for one compliance check or the other, sometimes becoming even a nuisance to them. And if you don't attend to them, if you don't do something quickly, they can close up your business. They can embarrass you and all of that, even from the local government. So issues of these institutions and the burden they place on investors is also something that is of concern to foreign investors as well as to domestic investors. Then there are issues of taxation, multiple taxation. Taxation from the federal level, taxation at the state level, taxation from all the regulatory agencies, taxation from the local government, all sorts of issues around taxes, levies, fees, licensing. Those things are also too many. So those things contribute to the problem investors also face. Then we have infrastructure issues. If you go to a supermarket of the size and status of Shoprite, you expect that the place should be cooling permanently, the lighting, the air conditioning, all these things must function 24/7. Most of the time they are running these things on diesel, on generator. These things also have implications for their cost of operation and cost of production. Their dependence on alternative energy is not as heavy, maybe in South Africa or in Morocco or in Egypt, in some other parts of Africa. So the pressure of costs arising from infrastructure deficit is a major problem. Then because they are in the retail sector, logistics is key. Logistics about having to send the products around their various stores. I think they have over 20 stores in Nigeria. So imagine the logistics of moving their products of same standard to all these stores, with the quality of the roads, with the security problems that we have. That again is a major burden.
Dr. Muda Yusuf,
this kind of logistic challenges don't happen in many other countries.
If I may now button here. If I may now button here, you talk about the logistics and supply chain issues, and these are really evident from large corporates to small-sized enterprises. But now, let's take the mantra of Shoprite, for example, low prices you can trust. At a point in time in Nigeria where inflationary pressures, the food price index is also skyrocketing, food composite index is skyrocketing, how do we now have cost-cutting measures come into play? Because that's the conversation across board globally. Price cuts. We have to see competitive pricing. And if you don't have lower costs, it's either you're compromising on standard or quality, and that's not even an avenue to look out for. So how then do we now begin to address these issues if we are having production challenges, we are having insecurity? Then the picture is bleak for the average retail outlet, be it those who do online shopping or the traditional shopping centers. The picture is bleak. Do you share that sentiment?
I do share that sentiment. You are very correct. The future the prospects are not very good, not just for retail outlets, but even those who are doing the production. Because you need to look at the entire chain. Those who are producing now, even goods that you ordinarily just find, some of these beverages and things that you easily pick up on the shelves, some of them are becoming very scarce now. And when you talk to those who are producing them, they say they can't have foreign exchange to import their raw materials. So the entire chain is challenged. From the production to those who are marketing, distributors to retailers. And costs are increasing by the day. You know what the inflation data is telling us? Food inflation is over 20, it's going to 21%. You know? The normal inflation, the composite price index is about 17%, 17.33. So all of these things are taking a huge toll on the entire chain in the distributive trade sector, up to those who we can regard as maybe the offspring, which is those who are producing. And as these prices go up, it puts pressures on their cost of production, and it erodes their profit margins. And it's even worse because we are just struggling out of recession. We are just coming out of the challenges of COVID-19. So purchasing power is weak.
Do you see any new U-turn, Dr. Muda Yusuf? Do you see a U-turn in this narrative?
Well, it's a gradual thing. It may not be a sharp U-turn, because from all the indications, the economy is recovering gradually. I mean, you saw the projection of the IMF recently. Exactly. It's looking more positive. You saw that Nigeria recently exited a recession, although very marginally. The growth is still very fragile. But the situation today is much better than the situation in 2020. And our expectation is that the situation will continue to improve. But surely, the environment is extremely challenging for practically all investors, and that is what is playing out, although it is affecting some sectors more than others. So that is what is playing out in the decision of Shoprite to exit and sell its shares to some Nigerians or other investors. But just as I said, South African investors are doing extremely well in some other sectors that are not facing as much challenges as the retail sector is facing. I talked to you about MTN, I talked to you about multi-choice, Stanbic IBTC. You know, these are South African businesses, they are doing very well. And some other investors like that. But some sectors are really very, very challenged. And it is important that we begin to address all these fundamental issues around policy, which we are not doing enough of. There is need for serious trade policy reform. There is need for reform in the foreign exchange policy environment. We need to do a lot more around our ports to make it easy for export and imports to flow. We need to prevail on the shipping companies and the terminal operators. No, so these are some of the things, and also our regulators. The regulatory environment needs to be much more friendly to appreciate the value that investors are bringing to this economy. Regulators should not be seeing themselves as revenue-generating agencies alone. What we are seeing now is that there's greater premium, greater priority, greater emphasis on generating revenue by regulatory agencies than ensuring that they create a trade facilitation environment to encourage investment. So these are the things we need to do to avoid a repeat of the kind of exits that we are seeing from Shoprite. Because no matter what you say, it is not a good news that investors are leaving the shops. because it sends very bad signals. It creates very wrong perception.
Exactly.
Of the economy.
Thank you very much so far for your contribution on the Business Nigeria show this afternoon. Dr. Muda Yusuf, the Director General of the Lagos Chamber of Commerce and Industry. Government has to take cues from all of these that you've mentioned today, because we cannot continue to have a stifling environment, be it on the local or international front. We need these investments, both on the local and then on the international front. We just need to drive as much as possible to the country, and we can't do that in just a silo. We have to work in coordinated efforts across board, because there remains a chain of activities and processes to have services that deliver, products that deliver in country. Thank you once again for your time on the show this afternoon.
Thank you very much. Thank you.